And that's also in the area of this 618 Fibonacci retracement. So again, I'm recognizing the opportunity. Well, if the market does move up, what does this mean? What have I just gone through? What's the whole point of that? What that means is I'm thinking ahead to the next move. And what I'm thinking is, well, if the market does stop me out and I lose money, I immediately go to where is the next opportunity? And that would be in this area up here. So I know if the market does go up, the next opportunity is not that far away. Now, what if you're in a place where you can see the next opportunity, but that's not enough for you? Realistically, what that means is you've got to decide to trust your system. If you can see the pattern and you can see the opportunity and you can take the trade, but you still freeze, that's when what it really boils down to is you have to decide to trust the system, to trust your system, yourself, to trust the setup, to trust the patterns. That's the only way. And again, we'll go through some exercises, and again, it makes a big difference if you're doing this live. We'll go through some exercises on how to go through this, on how to get this trust. Okay, that I should move on, because otherwise I'd spend another probably 5-6 hours. I trade the London market live in Austria. I get to my desk at 6 a.m. to prepare. Let's say I see a beautiful pattern, but it's 5 a.m. in London. Should I wait until the actual open or just jump in? That's a difficult question to answer, because I understand what you're saying is it's outside of the sweet spot in London. I would say be careful, and it's specifically because brokers, when it's quiet, can come in, steal your stops. We'll talk about some of that a little bit later, even on this Q&A. So you just have to be very focused. You have to recognize that the market can oftentimes make very big moves on very little volume. So just be careful. Next question: how are the transactions reported for 1099 purposes? Most brokers will give you a cash settled report. So they'll tell you what the actual net dollar value was when they're reported. And you'll have to talk to your accountant about all the implications of that, whether it's a futures contract or whether it's considered long-term gains, short-term gains, etc. Keeping records that record the number of pips and net gain loss won't reflect this, will it? I really don't understand what that question was asking. Again, your broker's going to give you the net dollar amount gained or lost. As far as the pips, I don't know that that's even necessary. The next question was, has the crew been discovered? And I got several emails over this. If you will remember, the last couple of trades, I hoped to have made a very clear point about the risks involved and that there would possibly be a whipsaw trade. Now, what exactly did I mean by that? Well, let's talk about the trade I was looking at last night. Here was the entry, right about there, and then here was the stop. Okay, and some people were reporting that the market came up to my entry point and then immediately went down to the stop. And depending on the broker platform you're on, it might not have gotten down there. In fact, some broker platforms did not get down to the stop.